What's going on, you guys? Welcome back to another video. This is going to be a weekly recap of the Autopilot Trader. I've got some exciting announcements for the trading automation that we currently have set up. This is trading the 2-hour trader framework, completely hands-free, completely automated. So TradingView generates the signals, it gets processed, it goes to your broker. It's entirely hands-free. This is something that I've been working on for the better part of 2 years. It is the direction that I'm taking my personal trading. We're going more and more into automation. That's the direction I want to head. If you guys are new to the channel, my name is Kyle. I'm a full-time futures trader, been in the game for about 10 years now. Also the founder of the Power Trading Group, formerly known as Opinicus. And what I wanted to share with you today was I wanted to take a look at the results for this week. It was a red week for Autopilot Trader with the default settings. And this may sound crazy, but I'm actually happy it was a red week because it prompted some big changes that we're going to be rolling out most likely in the next 7 to 10 days. And I wanted to go over kind of what we saw, what prompted the changes, and what the backtesting actually looks like with some of the updates that we made. So when we look at APT, this is going to be how the signals are generated. You could see long setups being taken here, and now the red line is going to be your stop loss. And typically this is optimized for the 2-minute chart on NQ. And like I said, the signal gets generated, it's processed by a third-party signal processor, and then it gets sent directly to your broker, all in a matter of literally 1 to 2 seconds. So it's very, very fast. It's been working pretty nicely without any bugs for, I would say, the past, I want to say 45 days or so. We haven't had a single bug. We actually did have a small bug this week. If you are currently with the Autopilot Trader, if you are currently signed up and using the Autopilot Trader, you may have noticed, I think it was on Tuesday, but one of the days this week, we had a trade into the close that did not get fully closed out before the session ended. Thankfully, we recommend that everyone start off with APT with a simulator. So mostly everyone was in a sim account. And so it was not a major issue, but these are some of the things that you don't really learn with automation until you're actually running the thing, and you get a number of different variables thrown at you that you can actually account for with a real life test. So back testing is one thing, right? But real life forward testing is going to be a totally different thing. So we're looking at a couple of signals here on Friday. Typically during these videos, I go through and kind of analyze every single signal, and we talk about every single signal and whether or not it was valid. Today, I'm actually not going to do that. The strategy continues to be traded properly. I'm not seeing any issues with how APT is looking at the 2-hour trader framework. For those of you that are familiar with the 2-hour trader framework, you'll know about the strategy. And so what I see with APT is that it is following the strategy. Now, what we've been talking about in prior videos is the fact that it is a little bit harder to filter automation compared to like discretionary trading. As a discretionary trader, we can see a setup and we can make a judgment call based on other filters. It may be higher time frame analysis, it may be something else that we're kind of deciding, all right, do I want to take this trade or not? And we can kind of filter higher quality setups based on a discretionary approach. Now, automation, it is much more challenging to do that, to actually get all of these filters into the code. And so I've not seen an issue with the setups it's just that it is taking some setups that, in my opinion, are a bit lower in quality. And what we found this week, especially this past week, the past 2 weeks, really, with the major increase in volatility, is a couple of things. Number one, it is taking trades a bit too frequently, and it's taking some setups that, again, I think are going to be lower quality. And so my main goal with making changes this week actually started out with some users requesting a maximum point stop. So, as it was previously, the code did not look for a maximum stop limit. It wasn't evaluating how many points the stop was. It just saw the setup. And it's like, okay, we have a setup here. We're going to take the entry, and it would adjust for volatility based on targets and stop loss. But when volatility expands, you may be looking at some stops that are, 60, 70 points, which is going to be pretty large, even with light sizing. And so if you are taking some of these bigger stops back to back to back, that's going to be pretty bad for the account, right? That's not going to be a good thing. You're going to be in more significant drawdown than you would otherwise be in a lower volatility environment, simply because of the range that is expanding, of the volatility that is expanding. And so you can make all of this progress over weeks and weeks and weeks. Volatility picks up, and then you're taking larger stops. Doesn't mean that the strategy failed or anything like that. It's just the code is looking at these larger structures, making adjustments on the fly as it receives data, and it's not accounting for maximum stop size. That was not built in. So this is something that we actually built into the user interface. So you can now, when we release the new version, which is going to be ideally, I want to say by this coming Friday. So at the end of the week, I just want to test it for a week or so, make sure everything is working properly on my end. And then we'll go ahead and push it to production, push it to all the users. But when you actually take a look at it, what you're going to see right in the settings is you have right here, we have risk management, enable a max stop filter. And again, this is going to enable pretty much any maximum stop distance in points that you want to put in here. You could put 25, you could put 10, you could put 40, you could put 50, you could put any value. Now, of course, when you do this, it's going to have some impact on the results, right? We don't know what sort of impact different risk management filters are going to have on the end results, because you're going to be filtering out some trades that may end up being winners. But it is something that I thought was necessary to bring into the mix, so that the end user can say, hey, I don't want to take a trade that is going to be 50 points of risk. I don't even want that in my account, even with lighter sizing. So this gives the end user some ability to have control over the maximum amount of risk that the automation is taking. And even though this may skew the results, could be favorably, could also be negatively, but it may skew the results. I think it is something that is beneficial, as not only an user of the automation, but as someone who is, providing this tool for other traders. We want to be able to give people the ability to limit the amount of risk that they are putting out there. Now, when I started doing this, it was earlier this week, after we had some comments about being able to actually set the maximum risk threshold. I started thinking, I was like, well, what if we could just eliminate some of these lower quality setups? And I really started thinking about how the bot thought about trades, and knowing that there seemed to be some underperformance when things were more volatile and the market was a bit more sideways. And so I spent most of my Saturday, most of yesterday, actually adding some refinements. I tested over 25 different configurations with the standard 2-hour trader framework within APT. And the pure goal of this was just to overall improve the quality of setup that was being taken by the Autopilot Trader. Now, one of the huge findings that we had that I can actually share with you is that the strategy really outperformed during the early morning session on the 2-minute chart. So now what I've built in, and what we're going to be releasing with this next update, is a hard cutoff, a specific time where it's going to stop trading, it's going to stop looking for signals. And this this actually massively improved the results. And I'm actually going to be sharing, we're going to be looking at the back testing here in a little bit. So stay tuned for that. Now, in contrast to that, what I discovered was that the 5 minute chart did well trading all day long, which is not all that surprising. If you've been trading for any length of time, you'll know that the smaller time frame that you're on, the more noise you're going to get. And so the 5 minute really does a great job of kind of eliminating some of that noise and giving much stronger signals. The flip side of that with the 5 minute is when we trade higher time frame charts, we know that the structure is going to have a stop that is typically much wider. Now, there was one other filter which I actually cannot disclose that we added to APT that is again going to be rolling out in the next update, and I wanted to show you because this dramatically improved the results not only for the past couple of weeks but on a year over year look back. So when we did the full 1 year back testing, this filter had a dramatic improvement in the performance of APT, which is great because if you think about the last year of trading, we've been in a number of different market regimes. We've had a trend market, right? Earlier this year, we had a trend market. We had the big volatility in April, massive volatility. And even just this past week, we've had some fairly big volatility. Nothing like April, but still pretty big. And then more of a range bound, more of a sideways market for this past week. Now, when I actually, so take a look here on the screen, you're going to see these green arrows. That's the current Autopilot Trader. That's the current one that we have set up. So it would be taking all of these long setups. I want to show you the updated version that we're working on. And what's going to happen is these arrows are going to turn blue for the trades that the updated version would have actually taken. Now, it is far less trades, but they are higher quality setups. So if you are an APT user, you're going to be noticing after this update rolls out that it actually takes fewer trades. But again, they are much higher quality, and the backtesting results showed that this was a big improvement over what we had. The hit rate stayed the same, around 70%, depending on which way which settings we use and which way we set it up. So that was really good to see. It's just being more selective with the quality of the setup that it's actually taken. So let's turn on this updated version and look at this just right off the bat. So I turned it off for a sec. Looking at these 4 arrows here, we have 1 long being taken and then 3 shorts on this particular day. With the updated mode, it's only going to be taking 1 trade on this day. Now, it doesn't have a limit on the amount of trades that it can take on the day, but you'll notice most of these trades, and this one right here was a massive winner. But again, we're not looking at isolated trades. We're looking at hundreds and hundreds of trades to really get the maximum sample size. And so that kind of takes me to another point with the law of large numbers. You really have to focus not on what happened this week, but we have to focus on multiple weeks, multiple months. That's where the edge is really going to be playing out. So over 1 week, over even 2 weeks, you're going to have some variance, you're going to have some volatility. As you get more trades within the sample size, that thing is going to get closer to actually riding the mathematical edge, the mathematical positive expectancy that it has. And so let's go back to Friday and kind of look. So Friday actually would have taken no trades, right? Even though one of these was a nice winner, that's okay. We're focused on much larger sample. So there's one that was taken on Thursday, right? Passes on that other one. We already know about this one from Wednesday. And I'm just going to go back through the entirety of October so you can kind of see what's happening. So passes on this one in the afternoon, takes that short. Again, we're looking at the blue arrows to kind of see the difference, to see how much more selective it is with the trades it's taken. So here's a short, here's a long, right? Scrolling back some more. There's just one trade from pre-market that particular morning. This particular day, it passes on this afternoon short, but it nails this one right through here. Very nice. I like it. I like it. So we're scrolling back. Let's see, we're October 8th. So it passes on that one. And again, we're looking at the new updated model. Takes that one, solid. Takes this long, really nice. Pretty much nails the low on that day. Really great. Now look at this particular day. This day was with the current APT, with the current Autopilot Trader setup. It would have taken 4 trades. With the update, it would have only taken 2 trades, which is beautiful. That's what we want to see. We want to see higher quality setups. It would have taken this one. This one would have actually been stopped out. It's quite all right. Over here, we have a nice long that it takes, and then a short right through here. Solid. And we're back into September. So you kind of get the gist. It's taking far fewer trades. Now, one other update that we built into this thing that was another user request that I'm thankful you guys mentioned. If you're an Autopilot Trader user, you'll know I put up the feature request post earlier this week, and there was a big request not only for the maximum risk per trade, but there was a big request for moving the stop to break even after PT1 was hit. So the default settings on Autopilot Trader are, it has 3 targets that it's aiming for: PT1, PT2, PT3, and then after PT2 it would move a trail. Now these were the default, they still are the default settings. Updated mode that we have, you're going to have the default settings, but you're also going to have a PT1 break-even setting, which means when the first PT1 is hit, the trail or the stop moves to break even, and then it is locked there. So it does not move after that. Testing this with back testing showed actually incredible results. And I want to take a look at the back testing right now. Let me reset this onto today's action, and let's actually jump in. So I want to make sure a couple of things here. Now, I don't love TradingView back testing because it is slightly inaccurate in the sense of how it actually measures entry and stop. But broadly speaking, it gives you a good idea of what it is that you're working with and what the strategy looks like. So it's not perfectly pinpoint accurate, but it's close enough. Like it'll give you a good idea, but again, not perfectly pinpoint accurate. And so what we're looking at here, this is APT 2-minute chart, and we have the PT1 break-even trail set here. You can see that right on the screen. This will be in the Autopilot Trader UI once we send the next update. So that's going to be in there. You'll be able to toggle this between standard, PT2 only, and PT1 break-even trail. For those of you that already have APT, the PT2 only model, that or the take profit setup, that's what Sean in the Traders Think Tank in the one of the APT users has been sharing his back testing on. So I wanted to incorporate that because I know a lot of you are currently using that. Now, surprisingly, let me show you these PT1 break-even trail results, okay? So we have a 1-year back test here. And again, this is 2-minute, 1-year back test. You can see the date, October. Oh, you can't see the date, but it's October 19th, 2024 to October 19th, 2025. And look at this. Look at this. So what we have, let me move that. We have $76,500 max equity drawdown, 24K, which seems pretty significant, but it's only 2%. It's only 2%, right? 570 trades, profitable trades 62%. So this mode does lower the hit rate, does make it a lower hit rate strategy. Profit factor 1.36%. So we can see beautiful profitability here. But remember, I was talking earlier about law of large numbers. Look at the periods of drawdown, right? Look at the periods of drawdown. There's normal drawdown segments within this, which is, it is normal. It is normal. There's really nothing else to say about it. It is a normal component of trading. There's going to be drawdown. There's going to be drawdown. So that is, again, we're talking about 2-minute PT1 break even. I want to show you the standard, right? So 2-minute default settings, profit mode, no maximum stop filter. Okay. And let's take a look. Let it update here. Again, there's a 1-year back test, 1 full year, October 19th, 2024 to October 19th, 2025. So we can see 60,000, right? A little bit more drawdown, 586 trades, higher hit rate, 73% hit rate. So I got a lot of DMs this past week because the hit rate with default settings was something like 50% for the past week, which is low. That's low. That's lower than what we expect from the 2-hour trader framework, and APT is trading 2-hour trader. So I understand the questions, but again, law of large numbers. We're focused on big sample sizes. So this is a 73% hit rate on 586 trades. That's a lot of trades. Profit factor 1.23. So pretty good, right? Pretty good on the 2-minute there. We can see that obviously the PT1 break-even setting outperforms. And just for fun, let's take a look at the PT2 only setting. Let it load. It's going to be a 1-year back test. And there it is, 52,000, 3.67% drawdown, 280 trades. So far fewer trades. Now look at this, profitable trades, 50%. So there was a recent post in the automation tab of the Traders Think Tank. Someone was asking me about if this method had a lower hit rate. Backtesting confirms it does have a lower hit rate. So we can see it is, compared to the other modes, it is underperforming, but still profitable, still nicely profitable, 1.17 profit factor. Now, what I found astonishing is when we flip, let me back up just a sec. That's not including anything with a maximum stop filter. So when you start to mess with this, the results are going to be skewed. I'll just show you. We're not going to go through tons of these, but I'll just show you one PT1 break even with like a 50-point stop. So it's going to be filtering a lot of trades in a higher volatility environment, which might be exactly what you want. But here's the back testing so you could see it. 50-point filter, 1-year back test, NQ, PT1 break-even settings. There we go. So 39,000. So this actually underperforms even more, right? It's gonna be filtering out quite a lot of trades. It has a lower hit rate, 61%. Total trades 493. Profit factor 1.2. So actually decent profit factor. Decent profit factor there. Drawdown is also 3%. Now again, don't be distracted by this value here, 34,000. It's going to be on a percentage basis that you really want to be focusing on these things. And this would be simulated with a $1 million account. And that's the TradingView default settings. And we're talking about 3 NQ contracts being traded here, just 3 NQ minis. So when you start to really tinker with the maximum risk setting, what you're going to find, or maximum stop rather, what you're going to find is that the settings get skewed. Let's just look at one more just for fun. The standard with the 50-point max stop, and just kind of see where we're at. 48,000 total P&L, 516 trades, 73% profitability. 73%, 1.23 profit factor. So you can see still profitable. But if you're wanting to optimize, there's definitely some better ways to go about it. Now, most interestingly, in my opinion, was what we found on the 5-minute. Let's look at the 5-minute. Let us look at the 5-minute, and I just want to show you the back test. Let's go to PT1 break-even trail. No max stop. Now, it's going to be tricky with no max stop on a 5-minute because 5-minute structures are wide. They're wide. You're going to have some stops that, if you are a discretionary day trader, they may be wider than you are comfortable with. But again, this is why sizing and really focusing on long-term time horizons is so important, right? So let's look at the back testing. 1 year back test, we're on the 5 minute with a PT1 break-even trailing method. No maximum stop loss as far as points are concerned. Now, that doesn't mean it's not going to be taking a stop, right? It's still going to be taking a stop. It's just it's not filtering based on how wide that stop is. Look at this. Look at this. So 1.4% profit factor. The win rate is a little bit lower, 62%. Not bad. 871 trades, 188,000. It's up. So we can see the 5 minute is massively profitable. A lot of those gains came from that April volatility, which is not all that surprising in a super volatile time. And 5 minute is going to give you really good signals. But even if you were to, like, if you can just visualize this, if you just cut off this massive run up and you just attach like this part of the chart to this part of the chart, we can see it's still trending higher, still trending higher. So it's going to be making money, absolutely. But even with a profitable strategy like this, look, there's periods of drawdown. There are periods of drawdown. So again, it's normal. It's normal. Drawdown is normal, not only in discretionary trading, automated trading as well. There is no just moon automation. Okay. So you have to get that through your head. Now let's try one more on the 5 minute. I'll show you the standard mode right through here. We'll check out the back testing again. 1 year back test. Talking about the 5 minute. Let it load. And pretty nice. 184,000 total P&L. Maximum drawdown 2.83%. 882 trades. 70% hit rate, 71% hit rate. So the hit rate stays valid. This is what we've been talking about for years and years now with the 2 hour trader framework. Honestly, it maintains that 70% hit rate no matter what you really throw at it, which is incredible. I love that strategy. And 1.35 profit factor. So really cool to see. What I wanted to show you guys was a Monte Carlo risk analysis. Now, if you're unfamiliar with what that is, basically what it does is I went ahead and exported the results from the back testing that we have there. And what Monte Carlo risk analysis does is it reorganizes all of the sequence of trades that you give it. So you give it all the trades from the back testing, it reorganizes them in a different sequence. And it does, in my case, I had it do 1,000 simulations to get a sense of what the maximum risk was. And so let's take a look at that. Okay, so taking a look at the Monte Carlo risk analysis. So it runs 1,000 simulations on your trading strategy data to analyze risk and return distributions. Now, this is an app that I actually built myself. So don't DM me asking for it because this is just on my local machine. But let me actually paste this in here. So I want to grab the 2 minute setup. And we're just going to paste all that in, run simulation with pasted data. And look at this. So the mean P&L, see if I can move this. Yeah. Mean P&L with 1,000 simulations, 70,000, median 70,000, mean Sharpe ratios 2.3. So profitable strategy, profit probability over 1,000 simulations of this data is 97.9%. Final P&L distribution is somewhere around 70K. You're going to have some outlier edge occurrences up above 150, right? And then you're going to have some, of course, that are down into the negative, of course. It's just part of it. Maximum drawdown distribution is going to be about 17,000. So again, this is on a $1 million account trading 3 NQ contracts. So you have to do the math here for MNQ. But overall, just a beautiful, beautiful strategy. Worst five, I don't know if you can see this at the bottom here. In 95% of scenarios, drawdown stays below 35,000. expected return about 70K, and there's a 97.9% probability of profitability over 577 trades. This is the 2-minute setup that we did. The 2-minute, I believe it was standard, take profit, and no maximum drawdown, no maximum point stop, excuse me. Now let's run a new simulation. And what I want to look at is the 5-minute. Okay, just so you can see what we're talking about here. Here's the 5-minute, and this is actually with the PT1 break-even. So run simulation, paste the data, mean P&L 193K, profit probability 100%. So in every scenario, this strategy was profitable. That's 1,000 iterations, 870 trades per simulation, no matter which way you organize them. The strategy is profitable, which that's amazing. That is amazing. That's exactly what we would want to see. Mean Sharp is 3.29%. Here's your drawdown stats. So that's the Monte Carlo analysis. I thought it was important to run this and kind of get a sense of, all right, well, we've got some good data on a 1-year back test. Let's see what it actually looks like if we mix it up. This is kind of the golden standard when it comes to automation and risk analysis. Okay, so this is another cool little experiment that I'm working on here with APT. Not that this actually matters too much because of everything I just shared. Uh, what I'm doing with this prop, I've not back tested yet. So I imagine based on the various back testing that we have looked at and what we already knew about the strategy and what we already knew about APT, that this will work. Whether or not it's optimal, I haven't verified the data just yet. But what I'm doing with this was run this past week. I just turned it on this past Tuesday. 4 micros. It takes off 2 at PT1 and takes off 2 at PT2. And I actually had a green week. It was up $200 this week, which is not amazing, but it survived. So that's pretty cool. I'm going to change the parameters that this thing is trading, and I'll give you guys an update next week. I also have another prop I'm going to be setting up on the 5-minute. I'm not actually going to mention which prop because I haven't done the research to see if this prop even allows automation. But that's just a risk I'm willing to take just to see how long it takes APT to pass a combine. We know it'll pass. It's just a matter of what is going to be the optimal sizing and how long will it take. Now, when it comes to optimal sizing, remember, drawdown is normal. We've been talking about this for the entirety of the video. I did have some traders within the group that I talked to this past week that are trading like 1 mini on a 5K account, which is it's crazy. Your risk of ruin, the data shows that the risk of ruin with this method is very, very high. So I don't understand why anyone would go about doing that. I mean, I do understand it. You wanna see the automation print money, you want to take a maximum amount of risk, but the math shows that there's a good chance that the 5K account just gets blown rather than actually making any sort of long-term money, especially if you start running it during a period of drawdown. So risk management and coming into any sort of automation with the right mindset of just small size and letting it play out over a long period of time is so important. If you're trading anywhere between a 5 to 10K account, you really should not be more than 1 to 3 micros. And that may sound crazy, but the data does not lie here. You have to be able to survive that drawdown. And you may be able to push it a little bit, but again, how much risk do you want to actually take? Like what percentage, what risk of ruin are you willing to actually take for some automation? For me, I'm not that aggressive with that. I'd rather just let it do its thing, can scale up in the future, let it grow over time. I mean, it's hands free. It's literally hands free. You're going to recoup your investment for the Autopilot Trader fairly quickly, even with some of those smaller accounts. Now, ideally, if you're going live, you want to have, 10 to 50,000 is going to be like the minimum that you want to go with. And then you're really in a safety range as long as you, again, size appropriately. If you have a 50K account and you're trading, 6 minis, uh, there's a decent risk of ruin there. So law of large numbers plus appropriate sizing is the name of the game with something like this. On that note, on November 1st, the Autopilot Trader goes to the price increases to $5,000. It's currently $2,500. So if you're interested in taking advantage of what we have built here, we only have 250 total seats, 250 total slots. Most of those are already filled up. So if you want to grab one of the remaining seats before we actually cap it, I would do that while the price is discounted. The reason we have this discounted pricing is because we're still launching, we're still ironing out some of the issues that we had. This being one of them. So we want to give some of the early adopters a bit of a discount while we kind of work through some of these things. After we have it all dialed in, we have our onboarding process locked in, that's when we're going to be charging the full price. And so November 1st, the price increases. I'll put a link down below if you want to check it out. Otherwise, thank you guys for watching, and I'll see you in the next video. Take care.